Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I wanted to share with you guys 4 of the most important charts that are going to explain the correlation that Bitcoin, the dollar, and the commodity markets all have with each other. Now, it's really important to understand that every single market has its own sort of classification. And inside of that classification, it's going to have certain areas in which the market moves and different correlations, both positive and negative, to the dollar. When we analyze these, it gives us an idea of what is going to actually happen when we take a look at multiple different markets at the same time. And so for today's video, I'm going to be sharing with you guys 4 of the most important charts that have a very correlated history over the last 5 years and what it actually means for the long-term price of Bitcoin moving forward from here. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are in the description to go ahead and check out both of those. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty guys, so the first and main point of this entire video, we're going to be talking about the real correlations between the commodity market, Bitcoin, the US dollar, as well as the equity markets, because this is something I don't think a lot of people really understand, and the best way to understand it is simply just to look at all of the charts at the exact same time so that we can see kind of how Bitcoin has correlated with these assets over the history. And, you know, maybe how some of it, how there's a negative sort of correlation, like there is with the dollar. So we're going to be covering this thought today. But before I wanted to get into this, I wanted to actually give you guys a summary of yesterday's video and talk about some things that we're seeing updates as far as that. Now, first things first, let's actually talk about the dollar in the shorter time frames. So let's actually go into this on a 4-hour time frame and let's talk about some things here. Now, first things first, this was the resistance level that we were going to be watching. And that was pretty much the 104 level. Now, this is going to be our area of resistance, mainly because this was also the resistance of our previous highs when we were originally breaking out and going up here. This short-term impulse breakout of the all-time highs and us to fall all the way back down within this previous market structure, that's what's known as more of a deviation. Now, inside of a deviation, that could mean that this is going to reject bearish and then we're going to fall lower, or it can actually just mean nothing in the grand scheme of things. And if this gets a strong breakout to the upside and we move something like this and we get a move past 104, but the big thing is as long as we're holding support above 104, then this thing is going to get continuation into new all-time highs. And then our long-term target, like I said, would be about 109 to 110. That is where I would expect somewhat of a short-term top, if not the full top of this short-term cycle. Now, here on the shorter time frames, what we're also watching for, aside from this resistance, remember, keep in mind that we have fallen back within the previous market structure. And so as we're rallying up here, this could be a retest of those previous highs. And so we need to really just watch and see. A lot of that has to do with the fact that the equity markets are down, stocks are down. And so if the stock market keeps dropping, we go to a lower low, then we would expect to see the dollar make a higher high. And so this is what we're going to be watching for in the short term. We have bounced at our support level that we were watching yesterday. Our support level was basically 103 all the way down to about here. Pretty much the 103 level. And we can see that we actually didn't come all the way down to the bottom of this, but we're bouncing, you know, above the top end of this range. So everything's looking good as far as the dollar goes. It's looking more strength inside of the market. And a lot of that has to do with the fact that what we're seeing on the SPX, we instantly opened the market with a rejection at resistance. And now we're just seeing a lot of weakness, not really any buy support stepping in here on the shorter time frames. And so if this is just going to keep falling lower and lower, then we would expect to see the dollar just continue to break out, which is exactly what we're seeing so far. And if we're going to look at this chart on a larger time frame, let's talk about support levels if we don't actually hold support and we continue to fall for a lower low. And the realistic only option from this point is going to be all the way down here at about 3,724. That's most likely where this would end up falling to. We'd have most likely a quick fall all the way back down here. You know, we could see somewhat of a bounce if we did fall support like this. and then go down. It doesn't have to be in one straight, candle. But if this is going to be the case, then most likely Bitcoin's probably going to go to a lower low. I just don't really see a scenario in which this shows so much weakness and then Bitcoin doesn't show the same weakness as well. Because when we look at Bitcoin, Bitcoin's also selling off. But this was a point that I made in yesterday's video. I said that if the dollar starts bouncing and we head back up to this resistance, then what we would expect of Bitcoin would basically be this. A fall back down to this level at about 28,000 and a half. And then I said that depending on how high that goes, we could even see it drop back down to the midpoints of these wicks. Because when we looked at what happened during COVID of 2020, we had a lot of volatility during that period where we did the exact same thing, where we rallied up and then we came all the way back down to that midpoint again. And so, we still have a lot of price action to go, probably a lot of time left before we get any sort of major resolution in this bottom. I mean, even if we see a V bottom of sorts like COVID, this is the type of move that COVID actually saw with Bitcoin. We dropped all the way back down to the midpoint of that wick before we saw it bounce. And so I just think it's really important that we remember and keep in mind that we should expect to have to go through a lot more volatility in here. And on the 4 hour, we haven't even fully retested the lowest point of here. We're getting close to that level, which is what we want to see. But at the end of the day, guys, it's really going to hinge upon the SPX. It's going to hinge upon the dollar. But for me, what I'm really watching for is this dollar resistance. Are we going to end up hitting resistance and falling lower? Is this true deviation? Because the thing we're watching for with the deviation to play out, let's remove the jawing tools real quick. We do have bearish divergence on the daily time frame, right? We have a lower high on the RSI and we have a higher high on price. And this is also coming at a multi-year resistance. Remember, if we zoom out here, let's get a little resistance box here. We do have this major resistance level that we've rejected at over the course of 5 years. Now, as it stands right now, we're above this resistance. This could easily be a bullish retest before we break out and go higher. Keep in mind that RSIs can stay oversold or overbought for extended periods of time. But these are just short-term factors to keep in mind. If this is a deviation, if we are going to see this resistance hold true, if we are going to see Bitcoin ultimately bottom, then these are going to be the early signs and the points that we're going to look to for reversal. But we're looking at this 104 level, which we could even raise this up just a little bit to actually hit that 104 level. What we're watching for is this 104 level. And so we can continue to see the prices rise in the short term. If this is a rejection of any sorts, we can continue to see it rise. But even if we rise, if this is true confirmation of a bearish divergence, we would expect this to be a lower high before we start falling lower once again. And we'd probably go all the way back down to about 102, which if we can get a move like that, in my opinion, that would probably confirm the reversal point of this. I think we could actually be more serious about this actually playing out on a larger scale. Because keep in mind, as it stands on the weekly time frame, we don't have any divergence, and this could just end up turning into some type of a bullish retest breakout of the previous all-time highs and then a move to a much greater level. We're at a very interesting point in this cycle, and that's why I wanted to give you guys these little updates. We're going to have to watch these charts specifically because they're going to be ultimately what tell us the exact scenario that the market's going to take. So with that being said, now I wanted to get into the big point of today's video, is because all of them have some sort of major correlation, or they're at least in some sort of market that is separate from the others. So the S&P 500, this is going to be just your equity market, right? An index. As a rule of thumb, Bitcoin has correlated very closely to the equity markets. Now, at the top, we have gold. This is just going to basically be the commodity markets because gold is the biggest commodity. And so we're going to be watching this chart as well, kind of seeing and the correlations between it. Is it correlated with Bitcoin? Is it anti-correlated with Bitcoin? And then obviously we have Bitcoin right here, and then we have the dollar right here. So we're going to be going through these, and I'm going to be kind of going through the last 5 years of Bitcoin, and then we're going to be just kind of looking at what happened with the other charts so that you guys can kind of get an idea of what we can continue to see from different scenarios playing out inside of gold, Bitcoin, and the equities or the dollar. So first things first, let's kind of look down here. Let's get our basis. So let's move Bitcoin all the way back down to 2016 because this is where we're going to kind of be starting our major correlations because that's where you guys actually care about it. So if we look at Bitcoin down in here, the very bottom of the Bitcoin cycle in 2015, when we went through that about 280 days of accumulation, we can see that the very bottom of that capitulation was a period where the dollar was really rallying hard. And in fact, this rally inside of the dollar was actually the tail end of Bitcoin's capitulation. It fell from about $650 all the way down to this low here at about $106 on Coinbase. And during that period, the dollar was going up pretty heavily. When the dollar was going up, we also saw that gold was generally just trending down. Right, it wasn't really doing a whole lot, but pretty obvious to see lower lows, lower highs all the way throughout here until we bottomed. There wasn't much volatility, but it was, a downward market. So it's obvious to tell that during these periods of time, we see the dollar rallying up, gold's going to be going down. If the dollar's going up, Bitcoin's usually going down as well. So for example, gold topped right here, made a lower high. During that period is actually where Bitcoin bottomed. So even though they both go down at the same times that the dollar is going up, whenever gold tops and makes a lower high in its downtrend, Bitcoin would actually bottom. And so there was an anti-correlation between the two. And so if we come over here, this is actually where gold bottomed. It made its all-time low December 14th of 2015. And it was during that period that Bitcoin actually kind of topped from its breakout point and started to go through more of an accumulation phase. Bitcoin went through more of an accumulation sideways phase as gold started to bottom and break out. And at the very bottom of this breakout for Bitcoin, at the very bottom of its bear market, we actually see that they both they weren't really going up together. They were both going sideways. But once again, once gold made a lower high and fell, that was once again where Bitcoin broke out. So we see the same anti-correlation. But what's interesting here is as we get to resistance in the dollar back in 2015, that was the point where Bitcoin's bottoming in 2015 as well. So this accumulation period for Bitcoin was a distribution period for the dollar. Now, what's interesting here as well is once the dollar actually rallied back up to the previous all-time highs and that resistance, Bitcoin actually rallied up and broke out as well. And then they both kind of topped out here as well. But Bitcoin actually broke out and made a higher high, whereas the dollar was rejecting at the previous all-time highs, about to fall back down to pretty much a new low right here. This was technically below support. And during that period, when the dollar started to kind of fall down, we saw Bitcoin going up. And this is a really interesting point because what we're seeing here, once again, to just reinforce this inside of your minds, is just simply that we have an anti-correlation inside of whatever the dollar's doing. So Bitcoin and gold are going to be doing generally the opposite of each other. And whenever the dollar's uptrending, gold and Bitcoin are both going to go down together. But inside of both of gold and Bitcoin going down together, Bitcoin and gold are also going to be anti-correlated inside of that trend. And so that's the thing that we're noticing here. Now let's actually get into the equity markets a little bit, and let's talk about some similarities. Let's go to just basically the last year, the last couple years of our market cycle. Let's talk about basically ever since COVID happened, because I think that this is going to be a really good starting point to kind of see how the markets have been correlated as of late. And so here on the equity markets, we can see that this was COVID. This was the sell-off. Now, if you're going to notice across the board on every market except for the dollar, when COVID happened, gold sold off. When gold sold off, Bitcoin sold off, equity sold off, and the dollar pumped. That was the only thing that actually went up. And what's interesting is at the very beginning of it, the dollar actually sold off with them. But when all of these markets went for another lower low, the dollar pumped once again into our major resistance here. And then that's actually where we see the bottom across the board across the markets. Now, we're going to draw our resistance here across on the dollar so that we can pay attention and watch out for that. Now, what we saw with Bitcoin and with gold, they both bottomed. All three of them bottomed at the exact same time. That was the bottom for Bitcoin, bottom for gold, and the equity markets. And what we saw was they all kind of rallied up together, with gold breaking out quicker and showing more strength than the rest of them. Bitcoin went up quickly, and it went up pretty fast, but gold was showing more strength as far as breaking out of resistances, making higher highs. Bitcoin was still technically below. And Bitcoin actually synced up much closer to the equity markets. Whenever Bitcoin would pull back, the equities would pull back, or whenever the equities would pull back, Bitcoin would pull back, and vice versa. We were seeing Bitcoin just following equities. That was the major factor in here. Anytime, and that was literally what, that's how we created our cycle. This pretty much looked exactly the same as our crypto cycle. This chart looked about the exact same. And what's interesting is once the S&P actually broke out of this resistance here, Bitcoin also was breaking out of its resistance at 10K. That was a major psychological point. And then after that point, the SPX just consistently rose and Bitcoin outperformed and went on its massive run to 65K. And what's interesting here is gold, it was actually pumping throughout the periods that Bitcoin and the SPX were taking a long time to really accumulate. We can see that gold up here at the top was rallying and it made its new all-time high up to $2,000. And it did all of that when Bitcoin was still way below its all-time high, along with the SPX. This was when they were kind of getting ready to move past. The SPX had made a new all-time high and was breaking out of them, but Bitcoin was still at around the 10K mark. But what we saw with gold was once gold actually started to sell off throughout 2020, Bitcoin went on its massive impulse to new all-time highs. And so this is why I like to remind you guys, we have an anti-correlation between gold and Bitcoin, where when gold actually retraces, Bitcoin likes to go on these big moves and big runs up. Now, throughout this period, the SPX was just consistently going up. There really wasn't a ton of correlation between it and Bitcoin, aside from the fact that the SPX was in new all-time highs in price discovery. That gave a lot of confidence into the Bitcoin market to go to a new all-time high and have this type of a run, right? Bitcoin would generally pull back at the same times that the SPX would throughout this period, but Bitcoin was outperforming and leading. Now, we get a bottom in gold right here. That was pretty much our distribution point in Bitcoin. We get a breakout of our descending resistance right here in gold, and that was pretty much our short-term bottom in Bitcoin. But when gold actually pulled back, that was our true bottom in Bitcoin, right? And then gold kind of rounded out for a little while. Bitcoin rallied up throughout the period of consolidation for gold. And then once Bitcoin topped out up here, that was kind of the ending point of this kind of accumulation sideways for gold. And as Bitcoin started to retrace, gold broke out into this move and retested those previous all-time highs. And what we noticed with the equity market here was when Bitcoin actually topped in its cycle, we actually saw the opposite correlation. So Bitcoin topped right here. SPX kept rising throughout this entire period, and we didn't get a cycle top inside of the SPX until all the way over here for Bitcoin. So throughout this period, we kind of unsynced from the SPX as far as following it 100% exact, because the SPX kept making all-time highs, new all-time highs, and Bitcoin went through this long-term kind of bearish sort of consolidation structure. And gold throughout that period was mainly accumulating and breaking out of its bottom. So keep in mind, Bitcoin is in distribution and gold is starting to accumulate and break out. But in this last dip, they've all kind of synced up and followed together, with Bitcoin following much more closely to the equities. And we can see that throughout this period here in the equity markets, when we kind of bounced and made this short-term bottom and lower high, that was also the point where Bitcoin bounced, made a short-term lower high. And then since that point, we've all rejected and fallen lower. That is with gold, that is with Bitcoin. And the dollar is at this resistance. And so I remind you of all of these charts, and it's been a long kind of drawn out video. I'm sure the majority of you guys didn't even listen to watch this far. But the thing that we're trying to watch out at this point in the cycle is ultimately, what does this mean for our the next 6 months in price action for the rest of the markets? And what we can see here, and I'm going to continue to kind of hold to my thesis as far as what I believe the equity market's going to do. Now, I'm not saying that we have to bottom right where we're at, because we are showing weakness in equities, which could very easily be, room for more downside in the equity markets. We could easily drop for another low all the way back down to 37.5, right? That is still something we're going to be watching for. And so we don't have any sort of confirmation in the short term. We don't have confirmation with Bitcoin if the equities aren't in as well. And so what I believe will ultimately happen, even if we get a lower low, this is just going to be a higher high. This is just going to be a short-term correction before we ultimately find a bottom and then start going up into a new cycle once again. When that happens, we would expect to see Bitcoin bottom once more. and we would expect to see the dollar top. Now, we're at this interesting point in the dollar once again, guys, where we're at this multi-year resistance that we historically have topped from, but we're at a point where we could easily be at the point of breaking out of it and making a new high. Now, the reason why I don't like the idea of us actually making a new all-time high in the dollar, or at least in the short term right here, is simply just because of the fact inflation is rampant right now, and that doesn't really make a lot of sense for why the dollar would be doing really well. I mean, yes, I understand with inflation high, people are rushing to really hold dollars, and I think that that's kind of why we've seen this rise in the short term already. But as we're at this resistance, I think the best way to play the market is simply looking for, the rejection of the dollar. From a fundamental perspective, in my opinion, I see this as more of a weakness inside of the dollar. I don't know why the dollar would be showing a lot of strength in a time where inflation data is actually higher than previously anticipated. Those, to me, are things that create, a lot of fear, but those are reversals of trends, right? We're at this multi-year resistance, and now we're starting to hear a lot of news coming out about how atrociously high inflation is, about how it's too high, about all of this stuff. When you really look at that from face value and you just think about it logically, that's not a strength for the dollar. That's not a reason for the dollar to break out of an all-time high. That, to me, is what we would see at a reversal point, right? And so from my perspective, that's just kind of what I'm seeing here. Now, ultimately, it's going to rely upon the SPX. Bitcoin is more correlated with the SPX than anything right now. And even though, they're all kind of correlated together to some degree against the dollar, with Bitcoin and gold all dropping together in unison with the equity markets, it's really all eyes on the dollar ultimately. Whenever the dollar tops, that's when we're going to see reversal points throughout the board. But what I can say here is when we do drop it to maybe the equity market, equities are holding up better than the short term for the SPX. Now what I can say with the commodity markets is they're actually holding up significantly better than the equity markets are. And what we're seeing is a potential bottom in store for us in the commodity markets, whereas the equities look like they potentially are going for one more lower low, which would actually make sense to our correlation. Remember with what we talked about as we wrap up the end of this video, what we would see with Bitcoin and gold is an anti-correlation inside of a correlation against the dollar, right? So Bitcoin and gold are going to do whatever the opposite of the dollar is. Now, as the dollar's been rallying, we've been seeing gold and Bitcoin generally going down for the most part. They've both kind of topped and went through a consolidation period. Now, as the dollar is at this multi-year resistance that has historically created tops, and as Bitcoin is at a major level that we're all kind of watching to see if it's going to hold support on, and once again, as gold has also finished this deep correction, which when I look at the gold chart, it's just a pretty damn obvious ABC correction. Gold looks bullish. Commodities look bullish. I'm very bullish on the commodity markets in the short term. Bitcoin is weak because of the equity markets being weak. Bitcoin is going to be weak as long as the equity markets are weak. Bitcoin is going to follow the equity markets. And keep in mind that in the short term, what we see here with gold and Bitcoin, we do see a lot of similar market structures. And so if Bitcoin and gold, specifically if gold bottoms here, I don't think Bitcoin is far behind, and I don't think the equities are far behind. Generally, whenever gold would bottom, Bitcoin would top. So right here was a short-term lower high for Bitcoin. This was a short-term bottom for gold. When gold kind of broke out, Bitcoin started to retrace and go through that low. Now, when gold topped out here, Bitcoin bottomed and broke out and made another lower high. And the top of that lower high was pretty much the very bottom of this move right here. And so we see this anti-correlation in here. So if what we're seeing in the short term is gold looking like it's actually going to be creating a bottom, and if gold actually does bottom and starts to rally back up, we would expect to see one more lower low from the equity markets that would drop pretty much down to 37.5. We would most likely see one more lower low inside of Bitcoin. I am really not sure exactly how low that would be, but we would most likely see one more lower low inside of Bitcoin. And then from that point, whenever the short-term top of this gold move up would be, as it would start to fall kind of back down like this, we would see gold and the equities start to finally cement a bottom like that, right? So that's the kind of whole point of this video, is to summarize these things. What we're going to ultimately see is the inverse correlation of the dollar. We need to see the dollar to collapse right here. When that happens, it's all games, it's all fun, bull runs for all the markets basically. And even though there's an anti-correlation in here, it's not a big anti-correlation, whereas when gold's going up, Bitcoin's most likely going to be going up too. But we really need to see the equity markets going up. I mean, if this is a multi-year bear market for equities, yeah, Bitcoin's probably screwed. But I don't actually think that's the case. I believe the equities are going to bounce and go up like they always continuously prove us to do. So that's what we're going to be watching in the short term. Just keep in mind, we don't have to go for a lower low. It's just going to depend upon the SPX and what happens here, if we can find a bottom. But that's what we're going to be watching for. So anyways, guys, if you found value in this video, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing updates. If you guys want to join the Discord server, download my free ebook. Links are in the description. You guys can also sign up for my video course signals, follow all the trades that I take, NFT picks, all that fun stuff is taught to you guys inside the Discord. Go ahead, check it out. Thank you guys so much for the support. And with that being said, I'll catch you in the next one. As always, peace out.